Morning, Steve here in Chicago with the morning grain comments. Well, happy Friday. Hope everybody has a safe and nice weekend. Yesterday's big news in the grain market was the cancellation by China of 395,000 tons of beans. Some people say that China may have double bought U.S. and Brazil beans in case there were some logistic issues. And if Brazil can ship these beans, they'll cancel out of the United States. Just like vice versa, if there's some problems in Brazil, they'll cancel out of Brazil. That put a bearish tone into the marketplace. Yesterday, overnight, we've got grain prices sharply unchanged. I think the focus more is in the outside market in the U.S. dollar. Dollar is sharply higher, the yen is sharply lower. Yen just announced negative interest rates, and they add to a group of countries in the world right now that have negative interest rates, and it's raising a little bit of concern about the global economy and the outlook for potential slowing of the global economy. As far as the month of January, we had a friendly USDA report on January 12th. We ended up with March corn up 6 cents, March beans up 4 cents, and March wheat up about a penny. So not big changes. It was mostly a sideways market, but the funds did cover some of their net short positions in corn and wheat. We get the export sales report today. Wheat's supposed to be 250 to 400, corn 800 to 1 million tons, and beans 500 to 800. So a little bit of concern about the slowdown in the soybean export sales. China is talking about lowering their domestic corn price. They have big stocks. They're trying to figure out a way to get rid of these stocks and increase domestic demand. Some people think that the hog ration has been favored protein because of these high corn prices, and if they lower the corn price, it could increase the corn in the ration, reduce some of the meal demand, and maybe reduce a little bit their soybean import demand. Also, the big news overnight here in Chicago, there was a meeting yesterday for top producers, and the weatherman decided to go to the extreme, talk about a wet spring, maybe a late freeze, and a dry, warm summer. Talked about maybe $6 corn. So nobody knows what exactly weather's going to be or where price is going to go, but that was just one person's opinion. He also thought that El Nino might delay further the Brazil harvest. Other than that, your 2-week forecast in the Midwest, below normal temps and below normal rainfall as we get a little shot of cold air as we get into February. Again, funds, short beans, short corn, short wheat, and technical signals are suggesting a little bit lower trend, especially in the beans. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.